Good morning, traders. Welcome to this live FXDD webinar. My name is Chris from Elite Currency, and this is the 27th of February, where we take a look at the live charts and the live financial markets, specifically, of course, focusing on Forex, and we'll take a look at some other instruments, gold, CFD, and DAX, for instance, S&P 500. Before we start, though, be aware of this disclaimer, risk disclaimer, explaining the fact that trading for exchange and global financial markets in general are considered high risk and may not be suitable for everyone. Please seek the advice of an independent financial advisor for more information on that. And this webinar is for informational and educational purposes only. For those that are looking at the recording later on YouTube, you can join the webinars live through these links. The top link is for live trading sessions, and the bottom link is for live educational sessions. And of course, we recommend both. So take a look at that. With that said, let's head over to the charts. Let me share the MT4 platform. All right, there we go. So we got the pop up on that euro dollar to the upside as we were expecting. I'm not going to go through all those details again. That was discussed yesterday in the educational webinar and the live trading webinar. So I just recommend to take a look at those videos. But as expected, we got the upside. It didn't quite get to the 114.25 target I had in mind. It hit 114, missed the R2 by a little bit and the top of that channel. Now it's making a pullback back into the R1 and back into these broken resistance levels that now could act as support. So I do think that there is a fair chance that this is going to be a bouncing spot. For those of you that are following or joining from our ECS live channel, you will see the wave analysis that I indicate that this is a wave 4 probably of some degree. Now, this all piece is quite choppy, but I think it's a fair chance that this is a wave 4 and that this could be a bouncing spot. And price is actually already reacting to that. This is already some bullish candle. If we get a bullish candle that closes above last hour's high and above the 21 EMA, that could indicate the continuation already at that point. Stop loss would have to be below this low, I think, because it would be a fractal. It would be a fractal that's below the 21 EMA. In my view, that should be fine. At 113.65, I think, should be okay. You never know with trading, obviously. That's the whole thing. Nothing is a guarantee, but I think that should do. We got a lot of fractals in here, so I do think that this is a fair chance that this is a bouncing spot and a continuation spot. And it seems to be a retracement after the break and continuation. Let's take a look at yesterday's daily candle. And the daily candle, wait, let me get rid of this. It's a fair one. It's a pretty good one. It's pretty okay size. The close is okay versus the high. And the close is above the 21 EMA, which is indicating a breakout. We already had a retracement of yesterday's candle. Excuse me. And that retracement could already indicate the end of the pullback and a continuation of this uptrend, in my view. We had momentum, flag, and we're getting a continuation here within this uptrend channel. And the break of the 21 EMA could signal a higher push, a bigger push, to higher levels, such as 115. Maybe if we really get a very big uptrend, even up to 117.50 later on. So I think that this makes sense. This is looking like a fair breakout. There's always a risk of a false breakout. From my point of view, it doesn't look like a false breakout. Looking at the daily candle and looking at these other time frames, so I think there's a fair chance that this is just a pullback for continuation. And you can never be 100%, but that's my view. And if you get a candle like this on the hourly chart, that could be one way, I think, of tackling that. The other options could be to be a bit more conservative, and of course there's always a chance that the price will continue and you might miss it. But yes, you could wait for a little bit of a pullback still, and then wait for a break. Maybe here there will be a fractal on one of these candles, this one or next one. And then you get a fractal, you get a little bit of retracement, and then a break of that fractal. And then you can have a trend line like that, and it could break that trend line. So it depends on how, as a trader, you have to assess a little bit how much you like a particular trade yourself as well, of course, obviously. And if you're doubtful, then this could be a more safer approach, because the break of a trend line and a fractal above the 21 EMA helps, for catching this breakout. Whereas taking this candle break above the 21 EMA is a little bit riskier. But the flip side is that if it does move quickly, then you'll be in the trade. Whereas if you wait, you might miss it. So, there's always pros and cons. Excuse me. All right, let's move on. Pound dollar, in my view, has hit the 133 level, and the main target that I had in mind when price was basically bouncing at the 50 fib here, breaking this trend line, making this pullback, bouncing at the fib, breaking above this trend line, and even the extra momentum trade we discussed at the R1 after this breakout candle. So 1, 2, 3, 4, 5, 6 opportunities here, all at different stages to trade this wave C and trade the various waves within this wave C. The main target of that ABC, one of the targets was 133. Now, I'm not saying that it necessarily has to be over, because if we put a fib from here to here, the wave C could be 134.40, as you can see, which is the minus 272 target. Let's also put a fib from here to here. And we see a 61.8 fib there as well. All right, so let me just check one thing. Hang on. 61.8 fib. No, there's a 50 fib as well. I see. 50 fib at 134.40 or 61.8 fib. I guess it depends how you fib it. In any case, let me get rid of this fib. In any case, 134.40 seems to be a kind of a confluence point, a target confluence point. So 133, we saw a reaction at that. We were talking about 132, 132.50, 133 as the nearby targets. But if you consider that this is a bigger ABC zigzag, yes, it could push further, and it could go to 134.40, which seems to be a bigger confluence zone. So this could be a flat kind of pattern, and we might see a continuation up to 134.40. I, at this point, don't have any particular, because price is right at the target. No volume. Does everyone hear me properly? Maybe the microphone is too far away from me. Okay, I'll try to keep the microphone a little more in front of me, maybe. So, hang on. So, yes, normally speaking, this could be a bull flag, a little bit small bull flag on the hourly chart. Hang on. And this could be a breakout. Unfortunately, we missed that. That was about an hour ago, this candle. And that could be a breakout after a flag. I would think that as a risky 15-minute breakout of a bull flag, because you have the 133 level so clear in front of it, and it's not broken. Not my cup of tea. If you are a little bit risky, more risk taker, maybe. I mean, it is a break, but wouldn't be something I would trade personally. But at this stage, I don't have, because the target is so close by, I would not have a way to trade this at this spot, to be honest. I probably, I mean, we do have a very strong daily candle. I don't see any way at this moment to trade it personally. Maybe if it still bounces at the 133 or this level, that there are a lot of fibs. Let me get rid of everything. 1 second. Maybe if it then retraces a little bit back into the 21 EMA and then re-breaks above the 21 EMA, that could be one way. All right. Depends. If it's a choppy price action here, that could be a correction. All right. So something like this, that could be okay. What we want to avoid is very strong momentum. Then we want to be careful with trading it to the upside. Or alternatively, I guess, if there is again a good 4-hour candle, let's get rid of these lines. That's a retracement scenario. Alternatively, if it breaks above this fractal with a very good candle, just like we had here, well, we might look for a pullback after the break of 133, maybe back into 133 zone, 132.75 zone like this, and try to get a continuation momentum trade, just like we had here. Those are riskier, but possible. So either retracement or break, pullback, continue, I guess, could be options to think about. 133 is then broken, and there could be space to 133.40, I think. All right, this is dollar yen. And seems to be building an ABC correction, this being A, this being B, and this being wave C. And that wave C, let's take a look where it could finish. I think pretty close. I think it could finish as S2, for instance. Wouldn't be a strange level to where it could bounce. Long-term moving averages there. We also have supply-demand zone in this region. So if not S2, then there's also a 110 round level, by the way. But then somewhere in this zone, so I think it's really, really close. That entire kind of support zone where we might expect some reaction. So I would not trade it to the downside. If anything, I would look for bullish candlestick patterns, bullish reactions in this zone, S2, S3 zone, for continuation higher to the upside. And next target basically could be the next quarter level at 112.50. We can, of course, use fibs to get an idea of what we're looking at. And this is a bit tricky what fib to use, but maybe we can use this fib. 113, you can see is the minus 61.8 target. Bounce at the minus 272 target at the moment. But it's very unsure if this is the correct fib, in the sense that I don't know if this is really a wave 1, 2, 3. That is very questionable. And big question, yeah, very big question mark at this point. But that this could be a bouncing spot, I still think that's valid. We just don't know, the bigger wave perspective. That's something that is unclear, I would say, at the moment. That said, this is still a strong support zone, and price could react to that. And if it breaks below that, that would severely change the perspective. And if it breaks through this zone, it's breaking through the 21 EMA. And in that case, something else might be going on. Maybe we finished the wave 1 here and we're going down for wave 2, for instance. That might seem the most likely at this point. If price is really moving impulsively, like a flash crash, Ali is asking, then I would be, in any case, extremely cautious of trading against that or with it, for that matter, if it's such a flash crash. And I would, if you know, be very skeptical about trading at that point until it calms down and you see some structure again. That was crazy, this one. Yes, indeed. Now, not to say that obviously if you are able to find based on technical some spot where it seems to be calming down on lower time frames, and you try to maybe, and you see the market is kind of stabilizing again, and things are turning a little bit back to normal, and you think that prices overreacted and have gone way too far, and you think that there's support, of course you might think about some trade once it settles down, and if there's a fib and if there's some support levels there, that would help, of course. But yeah, definitely better for the market to calm down first, definitely. All right. So hang on. Let me just. There we go. So let's take a look. How to put the fib on the dollar yen depends on the time frame too. For the moment, let me check what I have here on a different profile. 1 second. Yeah, let's take a look at this 4-hour chart. I think at this moment, I have this. It's a little bit odd because the whole structure is a bit difficult. I have this fib at this moment, which I'm not that pleased with, to be honest. But it's a bit of a tricky spot. So that's the fib I have at this moment. So you can see it kind of corresponds with the 38, 50, 60. That entire support zone kind of corresponds with those three main fibs for wave 4. So that's why I think it could be a bouncing spot. But if it breaks below that, then something else is going on. All right, so let's see how price responds to that. Let's take a look at some other pairs. I got some suggestions. That's great. EuroCAD, New Zealand dollar, and Pound CAD. So let's take a look at the first one mentioned, EuroCAD. There we go. All right, so price is at support. Moving averages are kind of squeezed, and we had a first break here. The second break would be good if it breaks above the 21 EMA on the weekly chart, but that's quite far from now. But not bad to keep an eye on that if you are a trader that likes to trade long term. All right, 21 EMA high, close above that. That would be the second break, and the moving averages are aligned to the upside. So that is an example of a trade that could be considered, I think, on a weekly chart. Daily chart. We are looking at momentum to the upside. We had momentum to the downside, but we're kind of slowing down. And you can see that it seems like price is kind of weakening its angle. And this downtrend channel is still present. It's still valid. But if price breaks above the 21 EMA, it would also break above these fractals and above the downtrend channel, the top of the downtrend channel. And considering the fact that price has not broken these bottoms, it looks like the bullish momentum is still intact, or still the most dominant factor here. Price basically kind of using these deeper fibs, or it could be at least. So from that perspective, this could be momentum correction, and the break above the 21 EMA and the trend channel could indicate that follow through to the upside based on that. Now, that break could be risky. Why? Because price has been below the 21 EMA for a substantial period of time, and we do have a 144 EMA above us. So a more conservative approach, and maybe the best approach in this case, is to get the break, see how the breakout candle looks like, maybe then zoom into a lower time frame and look for a flag. Or stay on the 4-hour chart, let it break, let it hook back to the 21 EMA on the 4-hour chart, and there is a very good chance that that will happen actually, okay? Because of the fact that price has been below the 21 EMA for a while. Let it retest the 21 EMA. It will either go in it a little bit or fully into it or even below it. And then if it goes into it or below it, you'll get a second break above the 21 EMA. If it just dips into it a little bit, you don't have that. It just kind of tags it and bounces. Then you have to look at lower time frames probably. If it goes back into it, then you can wait. Then the best is, I think, to wait for a second break, a second candle break above the 21 EMA and get that follow through there. Now, some of you might say, hey, this is still the top of a downtrend channel, and the moving averages are aligned to the downside on this daily chart, and price is back in the 21 EMA. Could we trade it to the downside? And I personally wouldn't. And the reason is because price is so close to support and so close has used these fibs here. So I think that's trading into a decision zone, too close to the decision zone without having any proper space. Enough reward to risk ratio, I don't think is not there. And yes, despite that, the market will do what it wants to do, and it might move down. But that's part of decision making, and I sacrifice that potential trade to the downside. If I miss it, I miss it. It's not worth trading in my view. It might move down, but I'll have peace with that. I will miss those pips. There could be other opportunities on other charts, etc. Velislav is adding the fact that there is divergence forming on the daily chart. So didn't analyze that. Let's take a look. Indeed, a good point. And let's take a look at. Yes, indeed. Maybe we can see it a bit better with the awesome oscillator. 1 second. Not sure. Here, maybe on the 4-hour chart, we can see it better. I think it's more 4-hour divergence. Yeah, indeed. Look at that. Very clearly, indeed. And it's a triple or quadruple. So that's quite a lot of them, indeed. On the daily chart, you can see that it's retracing, indeed. These bars are retracing. If you compare these bottoms, we don't have a lower low yet on price, so it's more of a convergence of the oscillator, if you see what I mean. But definitely a very strong one on the 4-hour chart. Let's check the weekly. And not much info there. All right, let's take a look at the next one, pound CAD, New Zealand dollar. And maybe one more. After that, I will have to push off in about 11 minutes or so. So pound CAD. Let's see. All right, let's start with the same process. Weekly chart looking pretty choppy and doesn't give us much info, I think. We can see, well, we do see that the moving averages are squeezed, but the price is above it. So that looks a little bit more bullish, I would say. It did bounce off the support trend line. The thing was that it looked like kind of a bear flag, didn't it? After momentum to the downside. That said, this could also easily be an ABC zigzag here, like that. And this is just a very choppy start of an upside. CAD is quite a difficult, I think, pair at this moment. All right, so we got these horizontal levels to think about. And on the weekly chart, if it does break like this, above the 21 EMA, that would be the third break already. That's quite a strong signal. And in that case, there's a fair chance that this 175 resistance zone might break if we get a good candle this week. So this week's candle could be very important. It would be nice if this week could kind of already break a little bit above that 175. Let's see what this week's high is so far. Oh, it did it already, 175.17. Well, so I think that if we have a candle close, this one was 75.26. Well, I think main point is that if this week's weekly candle closes very strongly, so I mean anything within 10%, if you calculate from high to low, and then the close is within 10% of the high, then we should see a follow through next week. We might see a little bit of retracement of the weekly candle, maybe to the 23.6 fib. We could put a fib on the candle high like this. On the candle itself, maybe 23.6 fib around 174.20, but not more than the 38 typically. I think 23.6 fib is the most likely. A small retracement, and we should see a continuation if we get such a strong candle. If it's between 10 and 20, it's a pretty good one, and there's a fair chance that the same thing will happen between 10 and 25, 10 and 20. If it's more, well, we'll have to analyze other aspects, I think. 1 second. So that's this week, and a plan for next week. Daily charts, a little bit of a wick, but nothing major there, I think, in my view. So yes, there is a resistance zone here, and it's a valid idea to think about sells because of that. And I definitely understand that thought, and it's a fair argument to make some trading decisions just based on certain resistance zones. And there is a confluence of resistance. There's 175 round level. You have two tops. You have the top of the uptrend channel, right, which is resistance. So you have a lot of arguments there that could be used for a bounce. Now, that said, I personally think that this daily candle, if you're looking for some type of reaction or confirmation, that daily candle didn't give it. So if you traded it yesterday at that zone around 175 and you're still in that trade, I would exit that trade. Let me say it this way, based on yesterday's daily candle. Because I don't think that trading, generally speaking, in that zone made sense to test the waters. But now that we see that the reaction was very mild, that the bulls kept control, I think that reversal idea doesn't have the best odds at this moment. I would move it to break even, and that's it. Probably get knocked out at break even. It was a good attempt to trade it, but you didn't get the desired reaction. That's my view, at least. If you're not in that trade, I would be very careful about trading it now, because I think the thing is that price, when it approaches that zone the first time, there is the biggest chance that it will react to that zone. On lower time frames, this is going to be the second attempt, so it's already less sturdy that price will react to this level, specifically because of that momentum, I would say. So I would personally, at this moment, I think it's the best approach is to wait for the weekly, or you can keep an eye on daily candles. I think it's okay if there is a bearish candle. I don't see any particular trade on lower time frames, just because I wouldn't want to trade into this resistance, but I wouldn't want to trade at this moment away from it either. So keeping an eye on daily candles and weekly candles, specifically weekly candle, I think is the most valid at this point, from my point of view, most important at this point. All right, let's take a look at New Zealand dollar. I mean, if you're more adventurous, this is a bull flag with the 21 EMA nicely aligned, and this is a huge momentum on the hourly chart. Don't get me wrong. 28 candles not hitting 21 EMA. Typically, if we didn't have this context of resistance that close by, it would be lovely in a way to trade this small correction and trade the continuation to the upside. But because of that, huge or at least decently sized the confluence of resistance, that is risky. Same, but trading it back down is also risky in my view. Let's see. New Zealand dollar and then pound odd, and then we'll have to call it a day for today. All right. Second break above the 21 EMA, still ongoing. And we were saying that this is wave A, B, likely wave C. Now, wave C has had a troubled start. The wave A, B seemed very clear. We actually had a very good start of the wave C with it looks like a wave 1, 2. But then this piece kind of messes up everything because it's up, down, up, down. It's very choppy and corrective. That's quite a difficult read. That said, if you look at the moving averages to get more help and structure, you see the 21 EMA is being pulled away from the 44. It is aligning itself to the upside. And we're still above the 21 EMA on the weekly, and it is still the second break. So upside is not looking bad in my view. And although probably this is not the best trend line, but I think it's still okay to use. We might be looking at a breakout candle already. It's a very small candle, unfortunately, so that's not the best. Fractals here. So probably better to wait for a break above 69. That doesn't necessarily have to be with a daily candle. Maybe a 4-hour candle could be enough. Considering the momentum here and the sideways price movement, I think it is likely the price is going to break above the R1 and continue higher. However, the breakout candle, 4-hour breakout candle would be confirmation. If it does retrace deeper and dips below the 21A or goes at least about halfway, and we get a second break above the 21 EMA, that could be also one way of potentially trading this continuation, in my view. Or wait for a good breakout candle and perhaps small correction on the lower time frame. The overall wave pattern is tricky though. But I think if we look at the moving averages, they are aligning themselves for a bullish continuation. All right, so those are the two things I have in mind. Now, you never know, of course, this once it breaks to the downside and it makes a flag like this, yes, there's, of course, the potential to go deeper. I wouldn't trade this deeper, but this trend line could still be support as well, by the way. And that could also still be interesting. And last but not least, pound odd. Let's take a look. There we go. All right, this is surprisingly bullish because it did give a potential for a head and shoulders pattern, left shoulder, head, right shoulder, but it never really broke below the 21 EMA. Instead, we had a first break attempt, second break attempt, now challenging these resistance levels. Now, it is still right at resistance, unfortunately, but a bullish break here too, starting to become more likely because of the uptrend and the fact that we are approaching that resistance zone for the third time, and therefore a breakout is becoming more likely. Good bullish candle yesterday. So I think that 185 is gonna break. Now, I'm not yet certain how to trade it, but I think a daily candle close above that and a retracement, if it's a strong candle, could be maybe something to think about. But On lower time frames, we're right at 185 right now. That's not a good spot to trade. So it's kind of a similar story. We're right at we have momentum to one side, but got the important resistance levels close by. But if we get a good 4-hour candle above that, maybe again a hook back to 185, a break, pullback, continue could be an option. Or maybe on lower time frames, let's see. Again, a pretty good triangle, but right at 185, unfortunately. Yeah, I would say maybe the break, pullback, continue seems to be the best option at this point. Thinking if there's anything else. Well, any break and a flag, of course, is also fine on the hourly chart. I mean, if it does move back lower, 184, 183.75 could be a bouncing spot. And if it re-breaks above the 21 EMA for, again, maybe. But, that seems so unlikely it will go that deep. But overall, if it makes a retracement still, I think it's a decent chance it's still a bouncing spot, basically. All right. Unfortunately, folks, that's all the time I have for today. I need to push off. Thank you for joining, and we'll hope to see you in the next webinars, of course, and we'll see you all very soon. All right. Cheers.